Alright, so in yesterday's video, the last thing we talked about was a spike that we had just caught up here in the top here. Let's see, the trade went in here, price spiked, blah blah blah, and I had to keep adding to the video because stuff was happening. Eventually we got a trailing stop and the trade closed and everything else, right? And so I'm going to go one bar at a time. I'm going to turn off the candles though. Let's see. I'm gonna go one bar at a time and we'll see what happens. Okay, I got another signal and another and another, and it was looking pretty good, right? And then wham. So I think I figured out what happened yesterday. Yesterday when the spread went to 40 or 45 or whatever it was, I'm guessing that was the broker was noticing that a lot of people were either taking profits or pulling their orders off the order book, if for lack of a better word. But these orders were starting to disappear, so they widened their spread in anticipation of what's coming. And that's also why the price shot up so quickly too, because people who were buying in were driving the price up, right? Because all the liquidity is gone. So now pretty much any buy order you place is going to drive the price up a little bit and a little bit and take out all the existing orders in the order book, right? And then right before the election, so this is maybe the space of 2 hours or so, right? Right before the election, it looks like people were just dumping their positions for whatever reason, and that drove the price way down. And we're talking here, let me scroll this thing all the way over, because the whole day was actually really, really active. I mean, if you look at this day, I had 5 trades. This day here, I have, what, 3, 4. And then here, there's like 25 trades or something. I mean, it's crazy, right? But let's get back on topic. I got in here at the top. I dollar cost average. Wait, let me do something here. I'm going to make the bars wider so that it's really clear what happened here. There. Okay, I got in at the top. Dollar cost average. Another dollar cost average. Okay, and then right here was my stop for the first trade, right? And the price just shot way down. Let's have a look and see what that is. If I go from this top channel down to this bottom channel here, that's about 167 pips in the space of 3 hours. Okay, it was insane. So I got in up here, right? Dollar cost average, and then eventually the first trade got stopped out. So a new trade goes in. That's how it works. A new trade goes in to try and move the break-even price closer to the current price. But then the second trade got stopped out. But look at something that I noticed. Look how close these two prices are, right? But look at the distance between this one and this one. That should be the same distance between these two stop losses. I didn't see this happen, but my guess is what happened is this first stop got slipped, right? So if I measure this one here, it's 88 pips. All right, this is for the second trade. If I measure 88 pips from this point, 88 pips is right there. Look how much further down the price went before it got stopped out, right? You know, like 100 and some pips. It's crazy. Okay, so there's 88 pips. That's where the stop was placed. That's where the stop loss was placed, but that's how far it slipped when that trade closed. That's how much volatility there was in the market. That's how little liquidity was in the market at the time, right? So these two trades closed almost instantaneously, I imagine. And then when this one closed, the first one, I got in immediately. So when this guy closed, it was too close to this price, it's too close to this open price to place another trade, right? Because I have to go at least 20 pips or something, right? Before before I place another trade. So what should have happened is this one should have closed up here, whatever that price was, and then that trade that opened there should have opened way up here. And then this guy closed with a loss, and the next trade would have opened right here where this guy is at now. And then the price kept going down, and the third trade closed, and that's where I should have placed, and I essentially placed the trade right immediately after, but that should have been a third trade, not a second, right? But it was this short distance that prevented the first trade from going in, so that this would be the second and this would be the third. I hope that's not too confusing. Anyway, it got down to here, price went back up, I finally got out of that round, and then literally, what is that? That's 16 candles. So 16 candles is 4 hours. 4 hours later, I got another signal. And oh, this is a good thing to show you. They didn't mention this in the previous videos. You see how this entry is below the channel line? That's because I have something called a trailing start. When I place the trade, I place a pending order outside of the channel, and then if the price goes against me, I move the open price down as the price goes against me, and then eventually when the price goes in my favor and opens that position, I've got a better price than I originally started with, than I was originally shooting for. So that's what that's all about, right? I call that the trailing start. That's something my friend Steve kind of turned me on to some years ago, and I've been using it ever since. But okay, let's go back to our regular size here. And okay, so this mess happened, and unfortunately, remember yesterday also we hit a milestone where my account was at $400 and I went up to the next lot size? Well, the loss incurred by these three positions put my balance down to almost $300. It was like $299 and some change. So I lost about $105 in this whole mess here, just in those three trades. And that is a very unusual situation. I rarely take more than one hit at a time, right? In which case I would have probably lost about $30, and then this whole mess up here gave me about $30 back, right? So I would have actually been pretty much at the same point if I just taken one hit and then caught all this volatility. I would have recovered from that hit by the end of the day because there was so much activity going on in the market, so much volatility. But now, so like I said, let's go back, go here to the balance. It shows 326, and like I said, when these three trades closed, my balance was like $299 and some change. So those $26 were just from this activity here, right? And that $100 loss was just from those three trades there. But look at this. This is crazy. Let's make this thing big again. Okay. Look at this guy here. This is... let's look at this channel. The channel here is 13 pips. Okay, this one here, let's look at this. This is 18 pips, so that's not even wide enough to hit the threshold. This one was, obviously, because I got a trade signal. Yeah, 21 pips is my threshold, right? When the channel is, if the channel is at least 21 pips wide, I can trigger a buy or sell signal. But then, and then the channel stayed that way. That was a nice streak. I mean, that would have been beautiful, you know. And actually, and this is something that, this is kind of where things get really weird with this algorithm. If I catch a little streak here, right? If the price had not crossed the top channel at the top of the uptrend, it would have never triggered a trade until it retraced and hit the bottom of the channel. And then I would have rode this all the way down, and I would have had a streak all the way down and maybe all the way back up. And if you look at my ZuluTrade account, which I don't have here, and I should have set it up so I could show you. That's exactly what happened on my ZuluTrade account. It caught this little streak, it caught the streak all the way down, and it caught this streak all the way up. And it just killed it. It was beautiful. This one, though, it was, you just got in at the, too little too late, and then the volatility just went crazy, and it took me out. And between that and the slippage and everything else, it was just a huge mess. But it's a good learning opportunity for you guys watching, right? And I'm not concerned about it, right? I'm still up 30-something%. I mean, when this trade closed, I was up like 61%. In fact, I have the Myfxbook here. Let me see if I can get it up here. Right there. Right? When I closed that one trade, I was up 61%, almost 62%, and then boom. And I lost more than I lost maybe 2/3 of my gains, my total gains. Now I'm at 31% now because it recovered 1/3 of what it lost. But when I looked at it yesterday, it was at like 19-20% or something. It was pretty scary. But still, look at that. See, this is what happens when one trade gets stopped out, right? Over here too, same thing. Right? But multiply that by 3 and it is ugly. And remember this one, it took 4 days to recover. It took 4 days to recover. So using that math, we're looking at maybe 12 days to recover from this loss. Right? So, which kind of sucks, but, as long as nothing unusual happens, I think we'll be fine. So let's go back. The other thing I want to show you is look at my average trade profit, right? This was at the peak. What does this one say? It says my average trade profit was $1.20. So in the last 100 trades, the average profit was $1.20. So basically, I made $120 in the last 100 trades, and then it was like whoop, the first loss, right? Lowered that number way down to 69 cents, and then the second loss. Where is that at? Let's see. 19 cents. And, oh, look at that. A trailing stop just begun. I noticed this little red flashing thing here. I was like, oh, what was that? Yeah, a trailing stop just begun. How convenient. So then by the third trade, I was in a negative. I'm like, yeah, it's like minus, what does that say? Minus 14 cents per. And then all this mess happened, and it brought my average back up to positive numbers, but I'm nowhere near. It's going to take me like 12 days to get back to this point where I'm averaging $1.20 per. And the volatility hasn't really gone away. It was crazy last night when the votes were coming in, and then it just went from crazy to big. But I mean, if you just look at this here, this guy here, that's 33 pips, right? And remember, we were looking at these, and we're talking, that's 12. Over here, this is a kind of a big one. There's 20, and that triggered a trade, right? But nothing. I mean, this is what it's supposed to look like, okay? Look how wide this channel is, all the way even to the current time. I mean, if we measure here, what is that? That's 14. Yeah. So it's, it's still pretty volatile. But let me explain what I think happened, right? People started to pull their orders off the books, and whoever was buying at the time was driving the price up to this point here, right? And then my guess is a lot of people decided they were going to take profits, and they decided to dump their positions, right? They decided to dump their positions. And so that started driving the price down. And then people noticed that the price was going down, so they started also to dump their positions to prevent losses. And it just caused this crazy frenzy because there's no liquidity. It just drops the price like you wouldn't believe. And this sort of stuff used to happen all the time in like 2006, 2007. But now there's so many players in the market, including the retail traders, that you almost never see that anymore. Not on the euro, not on the major pairs anyway. So people dump their positions, right? A few hours passes, and it's like, oh, look at the price. I can get it at a bargain now. You know, I sold it here, way up here. I'm going to buy it down here and get more. So they start buying it up again, but the liquidity is not there. So it still drives the price up, not as fast as it drove it down, but it still drives the price up, and we got almost back to where we were in the first place, right? This algorithm, when this happens, it usually thrives, but it can't get stuck. If it gets stuck at the top like this guy did yesterday, then with that big a move, it's just going to get wrecked, and that's exactly what happened, right? And even so, it made back a third of what it lost, and so that was, I mean, it was not a horrible day. I mean, it hit me pretty hard, I'm not gonna lie, but I thought, man, this is something that you guys definitely need to see this and see how I'm trading at huge risk, but the potential rewards so far outweigh the risk that it's worth it for me, right? I mean, my risk is $250, and like I said, I'm trying to trade this thing up to 100K, and we're gonna see if probably quite a few days like this where, you know, and it's gonna hurt a lot more when I go from, you know, 50K down to 30K or something like that in one day. But I think the journey is going to be really awesome. All right, this trailing stop is still going. It looks like I've locked maybe 4.5, 5 pips. There was something else I wanted to mention, but I can't remember what it was. I showed you the Myfxbook. No, I think that's it. So I usually don't record these videos until the trading day is over. So this white line indicates a period separator, which means the next day has started. To the right of this line is the next day. To the left is the previous day, right? If you're not familiar with the MT4 trading platform. So that's pretty much it. Like, I know this video is going to be long, but I think there was a lot of teaching opportunities here. And that's the other thing is, like, I've already told you this is super high risk, and I have no problems. I mean, like, the chance of 100% guaranteed failure is very high, right? But I'm not worried about that because I know this is an experiment that I'm doing. This is not like I've got my livelihood tied up in this thing, right? I mean, if I had started with like 25 grand or something, then yeah, I'm going to play it safe, you know. But I started with $250, and that is my total risk, right? If the account goes up to 50K and then tanks, I lose $250, right? That's the way I look at it. Okay. So I guess that's it for now. I'm going to end it there. And I'm kind of glad that I got this opportunity to share this experience, because this is something that traders get caught off guard sometimes, and it just ruins them sometimes. I mean, sometimes they lose their confidence to the point where they just can't get back in the game anymore when something like this happens. But, oh, look at that. The trailing stop just closed, the round just ended, and that's a perfect place to end this video. All right, guys, thanks for watching, and I will see you in the next video.